It is Tuesday, May 25th, 2021. Thank you for joining me. Stocks, bonds, real estate, and gold will crash. We're going to tell you who said that here in just a few minutes. Now, first, let's take a look at the way the markets ended today. We see all major indexes in the green. The Dow Jones is now 34,357. Now, remember over the past 4 years how we had the president bragging about the new highs in the stock market. Well, we've got a new president now, and we still see the same trend happening. Why? Because it doesn't matter who the person is sitting in the Oval Office. What matters is more easy money being promised to the markets by the money printers, by the Fed. And yes, I know they don't print the money, it's mostly digital, right? But they're conjuring up money out of thin air to support the markets, to monetize the debt, to manipulate interest rates and treasuries. They're buying corporate debt, they're buying junk debt. The Fed has a trading desk, a plunge protection team that's backed all by this digital money scheme, right? But people really think that it matters who sits in the president's chair when this is all manipulated by the banks. Sure, there may be some jobs that are affected with some policies here and there, but I'd say it's over 90% has to do with strictly the banking system, right? Maybe even more than 90%. It's my estimate that if we quit creating money out of thin air, if we went back to a sound currency, that you would see over 90% of the jobs that we have today gone, vanished. Now, because we haven't had sound money in over 100 years, there's really no way to gauge or come up with an accurate number on how that would look today. Right? So the problem we have now is that you need to create endless amounts, continuous endless amounts of debt to keep the bubbles propped up. And what happens if they let the bubbles pop? Well, they'll now get the blame because there's a lot of people now watching interest rates and other market activities. So what do they like to do? They like to divert the attention and blame something or someone else for what happens with the economy. But isn't it amazing that the stock market continues to make all-time highs and nobody questions it? But yet, just like we talked about in our previous report, we have 19 million people total when you look at all the homes that are behind on their housing payments. That's mortgage and rent combined. And nobody questions the fact that we have surging homelessness, farms going bankrupt left and right, food shortages, rising prices, stagnant wages. Okay, wages are up a little bit. We reported on that a few reports ago. They're up about 30 cents per hour since about 1 year ago. So I hope that 30 cents per hour can pay for a median home price here in California that's over $700,000 now. Well, the problem is it can't, but it doesn't have to. Why? Because people can borrow money. Institutions can come in with leverage and buy up homes, and corporations, and they can turn around and rent those homes to people. And they can keep raising rents, and it doesn't matter because people, they will spend their last dime to pay their rent to keep the roof over their head, right? So housing for profit in general is a big issue. But let's talk about what was said here recently. And we're going to go over to Twitter and take a look at what some pretty well-known economists and investors are saying. Robert Kiyosaki, quote, "The Fed wants inflation to pay debt with cheaper dollars. The Fed will raise interest rates, causing stocks, bonds, real estate, and gold to crash. The biggest problem, boomer retirement. Social Security, Medicare, and America broke. Fed to more fake money. Stick with gold, silver, and Bitcoin," unquote. All right, so somehow he is under the impression that the Fed is at some point going to raise interest rates. And I find that hard to believe. I'm not saying he's wrong, but we've seen a lot of well-known people not know exactly what's going to happen, right? You'd really have to be a mind reader and be able to figure out exactly what the money printers have planned. So it would be really interesting to see what would happen if the Fed did raise rates, because everyone would know exactly what caused the collapse. That's why I don't think the Fed will ever raise rates. Now, he also goes on to say the stocks and real estate and bonds and gold will crash, but then he says stick with gold. So I'm assuming that he means buy gold when it does crash, if and when it does crash. And just a couple comments down from his post, somebody replied, quote, can't wait for real estate to crash. I want some rental properties, unquote. Well, that person's going to have to compete with corporations, institutions that are going to be swooping in. If home prices ever collapse, they're going to be swooping in to buy up as many homes as possible, just like after the 2008 housing bubble went bust. All right, still on the topic of the housing bubble and the Fed here, Peter Schiff tweeted out the following, quote, Chicago Fed President Charles Evans just said easy money has full support and is unlikely to lead to the kind of undesirably high inflation that some notable economists have warned about. The Fed was just as dismissive of warnings about the housing bubble and the financial crisis, unquote. So Peter Schiff is basically saying the Fed is making the same mistake now because they're dismissing inflation. And I've heard Peter Schiff say this at some point. He thinks the housing bubble could go bust again, but I don't think he's sure either because nobody knows exactly what the Fed's going to do if they're going to raise rates. All right, Peter Schiff again here, quote, soaring housing prices, which aren't even included in the CPI, the way that they were during the 70s, finally caused April home sales to plunge. Even record low mortgage rates can't help buyers afford to pay. Soon inflation will price Americans out of markets for consumer goods, unquote. So in the way that people can't afford homes right now, pretty soon it's going to be like that for consumer goods if this inflation continues. All right, so think about if this inflation keeps going and we do see a situation where people can't afford most consumer goods. I think crime is going to go way up. There's going to be more unrest, more people marching and calling for higher minimum wage, which really won't fix the problem because we don't have enough manufacturing here and we don't have enough goods. We don't have enough goods being produced here to ever put the supply-demand situation back in balance. Right, so pumping more money into the system and handing out checks to people is not going to fix the problem if the price of what we need to live just keeps rising and rising and rising. Right? Everything that we need to survive is going up. Food, shelter, you name it. Energy. So how do people think that canceling rent or raising the minimum wage is ever going to fix this? You've got to get to the source of the problem, and that's what really, I'd say 99.9% of the people have no idea what's happening. I know most of you on this channel, you know exactly what's going on. But we live in a country with people that they really don't pay much attention. People are out there, in some cases, marching and demanding for things to be done that will not fix the problem. Example, cancel rent, raise the minimum wage, send out more stimulus checks, raise corporate taxes. It sounds good. It makes you feel good when you see corporations paying more, but they're probably going to find loopholes, one, and two, so they can keep their profits up. They're probably just going to raise prices for their goods and services to make up for the higher taxes that they have to pay. And they'll probably ship more jobs out of the U.S. into cheaper labor areas and countries with lower tax bases. Now, for people that think that home prices cannot get any higher, take a look at this chart. This is out of Tahir. It's off of Twitter. I can't pronounce his last name. I won't even try it. Home prices to disposable income ratio has completely diverged. There is now no way a future income can justify these fundamentals until there is some return to the mean. The fact that 90+% of Canadian net worth is tied to real estate. Now, let's take a look at this chart here. To the right, on the right side, is home prices compared to disposable income in Canada, and the left is the US. Right, so this could get a lot worse. Look what they've done to home prices in Canada versus disposable income. And it's a similar situation there. You have a bank that has endless liquidity, so loans can keep being pumped out to people, even though technically the banks don't have the money. The banks are broke. But most people don't realize what's happening. All right, folks, I don't know honestly which way this is going to go, if it's going to just keep going up all the way into a Zimbabwe type hyperinflation. All right, so I've said this before, I'm playing both sides. Let me know what you're doing once again here with this new information. What do you think about what Peter Schiff said, what Robert Kiyosaki said? Will the Fed raise rates at some point and crash the markets? What do you think? Let me know, and let's talk about it. Hopefully, see you here again soon on this channel. Everybody, stay well, keep stacking, stay prepared. Until next time, bye for now. Peace.